Oh, oh, hello, chasers! Today's episode is about the costly mistake that employers often make when playing Santa for their team, and then try to claim the Christmas party and Christmas gifts. I'm your host, Santa, Chris Becks, a financial and business advisor with over 40 years' experience and the founder of the multi-award-winning CBEX Business Solutions for Good. And as this is an accounting and tax topic, as a member of CPA Australia and a registered tax agent, I'm obliged to give you this general advice disclaimer before we begin.
The advice provided is general advice only, as in preparing it, we did not take into account your investment objectives, financial situation, or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. You should also consider the tax implications on your financial situation. Chris Becks, CPA member number 805103 and registered tax agent number 629433015, is a director of CBEX Business Solutions for Good and is authorized to provide accounting and tax advice.
Now that is done, let's dive into this episode. It's that time of the year when the spirit of Christmas is truly alive. The decorations are up everywhere. Mariah Carey is stuck on auto replay in the shopping malls. And businesses are looking to celebrate with their teams at the annual Christmas party and provide them with Christmas gifts. Over the years, I've seen a lot of mistakes businesses make when claiming tax deductions for these expenses. In this episode, I'll explain the most common mistakes and how to avoid them. The rules regarding claiming tax deductions for Christmas parties and gifts can be complex, but here is a general simplified overview. Quite often, the Christmas party is not considered to be a work-related event because it is held outside of work hours on a weekend, includes customers or suppliers, and is not held on the business premises. To be tax deductible, a Christmas party must be held primarily for the benefit of employees and must be related to their work. This means that parties that are held for customers or suppliers are not tax deductible. One way to ensure that your Christmas party is considered a work-related event is to hold it on a business day, during business hours, and on your business premises. You should also avoid including activities that are not work-related, such as gambling or excessive drinking. Your whole team should be invited, regardless of their position or seniority, and the cost of the party should be reasonable. If you are planning to serve alcohol at a Christmas party, it is important to check the laws and regulations in your state or territory. You should also consult with a lawyer or HR expert to make sure that you are complying with all of your obligations. There are some important things to keep in mind. The party must be held primarily for the benefit of employees and must be related to their work. The employer must have a responsible service of alcohol or RSA policy in place and must ensure that all alcohol is served responsibly. The employer must not encourage or pressure employees to drink. The employer must provide employees with alternative transport options if they become intoxicated at the party. Here are some additional tips for serving alcohol responsibly at a Christmas party. Provide plenty of food and non-alcoholic drinks. Serve alcohol in small glasses. Have a designated area for smoking and drinking. Encourage employees to take breaks and drink water. And monitor employee consumption and take steps to prevent intoxication. Another common mistake employers make is regarding Christmas gifts. To be tax deductible, a Christmas gift must be worth less than $300 per employee, i.e. $299 or less. If the gift is worth more than $300, the employer cannot claim it as a tax deduction and must pay fringe benefits tax on the value of the gift. Some tips for choosing Christmas gifts that are tax deductible. Give gifts that are related to the employee's work or hobbies. For example, you could give an employee a gift certificate to a bookstore or a sporting goods store. Give gifts that are related to the company culture, such as branded mug or t-shirts. Give gifts that are practical and useful. And avoid giving gifts that are extravagant or luxurious. Other common mistakes that businesses make when claiming deductions for tax purposes for Christmas parties and gifts include not keeping good records of their expenses, failing to distinguish between business and personal expenses, claiming deductions for expenses that are not actually incurred. You must be able to prove the expenses were incurred for business purposes, and you cannot claim a tax deduction for expenses that are reimbursed by employees. Christmas parties and gifts are a great way to show your employees your appreciation for their hard work over the past 12 months. However, it is important to be aware of the tax implications of these expenses. By correctly classifying your expenses, you can ensure that you are claiming the correct amount of tax deductions and avoid any potential penalties from the Australian Tax Office. If you are unsure whether or not a Christmas party or gift is tax deductible, it is always best to consult with a tax advisor. If you have any questions, please feel free to leave a comment below our podcast or contact me directly on 0355 612 643. Thank you for listening. I'm Chris Becks, and I look forward to presenting our next episode to you.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram at CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.